Welcome back to another edition of The Talking Hedge. I'm Josh Kincaid, and this is a cannabis business podcast. Some interesting news this week out of Maryland. We have a company claiming that CBD has been trademarked. We'll get more into that story in a minute. Yesterday, Aurora Cannabis reported earnings. And this week, more to come is Canopy Growth, as well as the Supreme Cannabis Company, InMed Pharmaceuticals, and Neptune Wellness Solutions, all reporting earnings coming up. In the meantime, Canatech holds a medical cannabis conference in Panama, and the National Cannabis Industry Association, or NCIA, is holding a seed to sale show in Boston. The U.S. House Financial Services Committee is going to hold a hearing February 13th at 2 o'clock entitled Challenges and Solutions, Access to Banking Services and Cannabis-Related Businesses. So let's just kind of dive right into banking, why that's a problem, what the limitations are, and what the results have been. This article out of Puerto Rico points out a lot of issues with banking. There's a Florida man charged a $100 million fraud that basically took out the entire banking system in Puerto Rico. A pharmaceutical executive in Miami was found guilty of federal charges in connection with the $100 million scheme more than a decade ago that triggered the 2010 collapse of Western Bank, one of Puerto Rico's most prominent banks at the time. Convicted earlier this month on 8 counts of wiring fraud affecting a significant financial institution following a 21-day trial before a U.S. district judge. According to the trial evidence from 2005 to 2007, this guy was a CEO of a publicly traded specialty pharmaceutical products and technology company. The fraud began in early 2005 when he entered a series of loan agreements with Western Bank in exchange for collateral and assets. Under the loan agreement, the bank advanced money based on the customer's invoices. However, the evidence showed that he organized this scheme to defraud Western Bank by creating dozens of fake customer invoices worth tens of millions of dollars. At the end of this scheme, in the summer of 2007, Western Bank declared default on the loans, ultimately suffered losses more than $100 million, and shortly after, the losses triggered a series of catastrophic events leading to Western Bank's collapse. Western Bank apparently was the largest bank willing to deal with cannabis companies, medical marijuana companies in Puerto Rico, a U.S. territory, and without that, they're left with nothing. So they're required, I believe, to make electronic deposits for tax purposes, but if they're forced to deal in cash only, that's not really feasible. So right now it's in limbo, up in the air, and creating issues. Seems like everyone's trying to create a solution. There's a lot of duct tape remedies like payment solutions. We'll get into that a little bit later. Out of Florida, they are seeking banking changes for medical marijuana companies. Florida's chief financial officer, Jimmy Patronis, is citing a tremendous safety threat and citing executive power to allow banks to do business with state-authorized medical marijuana companies. Medical marijuana has become a multi-billion-dollar industry throughout the nation, but banks are shunning cannabis companies because pot remains illegal under federal law. Patronis outlined a letter to Trump stating the dangers facing dispensaries mainly operating as cash-only businesses, as banks and credit unions won't take the deposits due to the lack of federal clarity on cannabis banking. The size and staggering growth of the medical marijuana industry, paired with limited regulated banking options, puts patients and employees in dangerous situations as potential targets for criminal activity. In the meantime, these businesses are easy targets for criminals and criminal activity. Patronis asked Trump, quote, to consider administrative action in the interim to offer clear guidance to the financial services community on how they can follow our existing state laws without risk of penalty from federal regulators. We must reassure financial institutions that there will not be retribution for servicing businesses that act within the state's legal framework. The cash-only cannabis industry poses a serious threat to security of our communities, Patronis added. He asked the federal government to step in to help now before an incident happens, and we're instead in a sad position of responding to the fact Santa Rosa has been handling financial transactions for cannabis companies in areas north of San Francisco. The credit union is limiting its size of deposits made by cannabis businesses so the institution can manage its capital raises and risking federal prosecution and investigation for handling financial transactions for those companies. Increasingly, credit unions are providing bank services to cannabis businesses, which are often rejected by private banks. This is because cannabis remains a Schedule I under federal law, and many are nervous about running afoul of US governments by doing business with the industry. I find it interesting that there's a lot of investors that want another 2 to 3 years reprieve from I find it interesting that there's a lot of investors that want another 2 to 3 years reprieve from banking legalization, because that is the fundamental ticket, if you will, for full legalization, for full legitimization and the ability to move forward both interstate and internationally. And yet these businesses can't really file bankruptcy yet. And so there's some interesting tax issues that go along with cannabis and cannabis investing. A Colorado cannabis greenhouse builder is trying to file Chapter 11, but being a Schedule I, you're not able to file bankruptcy within the legal system. And so let's dive into this and kind of see what's happening. There's a Denver-based marijuana greenhouse developer that's filing a bankruptcy after raising more than $15 million from investors. Currently, they owe $8.6 million to roughly 50 creditors. GrowCo is filing for Chapter 11 bankruptcy, which can be used to keep a business afloat by reorganizing and paying back debts over time. So GrowCo is not a plant-touching company. It was formed in 2014 to provide cultivation infrastructure and serve as landlord for legal cannabis businesses, as well as provide administrative support services, and disputes several $1 million, which is owed to creditors, including a claim from Blue and Green, which sued GrowCo last year for $2.1 million, asserting that the greenhouse builder failed to pay back loans. So it doesn't really go into the outcome, but I'm guessing that this is going to be thrown out, whether it's plant touching or not. I don't know if, well, I guess we'll see. Leave some comments down below, but my opinion is that this will probably be thrown out because it's a cannabis company and that they're not able to file bankruptcy. But being a non-touching plant, who knows? Up in the air, we'll see. And with that, we're going to roll this one up. This is Talking Hedge. I'm Josh Kincaid, and I'm out.